Pantheon AI presents Microsoft to buy OpenAI, plus Winklevoss twins predict Bitcoin $1 million, plus consumer sentiment crashes. Welcome back to the PAI Morning Briefing, everyone. It's September 12th, 2025, and we're so glad you're with us.
We absolutely are. Thanks for joining us for what's shaping up to be a really fascinating day. We're going to dive into the markets, cover some huge stories, and try to make sense of it all.
Let's start with that market overview. It's a bit of a mixed picture. The S&P 500 is basically flat, hovering around 6,589, and the Dow is down just a bit, near 45,913.
Right, a little bit of red there, but John, the Nasdaq is completely bucking that trend. It's up about 0.75%, trading around 22,142, so tech is clearly having a good morning.
That's the big split, isn't it? Meanwhile, the small caps in the Russell 2000 are down a little over 0.5%. And it's a similar story in crypto.
It really is. Bitcoin is trading around $115,000, but it's down just a tiny fraction. Ethereum, on the other hand, is up over 2%. It's sitting pretty at about $4,561.
So the takeaway is that technology, whether it's in the Nasdaq or in crypto with Ethereum, is showing strength, while the more traditional indexes are reflecting a bit more caution from investors.
Exactly. And that caution seems to be tied to the usual suspects, right? Geopolitics, inflation fears, what the Fed might do with interest rates. It's all creating this underlying uncertainty.
Good point. That slight dip in the S&P and Dow is likely just investors taking a step back to reassess those risks. But, as you said, there's still a huge appetite for growth.
A massive appetite. That's why we're seeing money flow into the Nasdaq and Ethereum. In this kind of uncertain environment, with supply chains still messy, big tech stocks are almost seen as a safe bet, which is kind of ironic.
It is, and it explains that performance gap perfectly. The S&P represents the broad economy, which is feeling the pressure, while the Nasdaq is all about that high-growth tech. Even in crypto, investors seem to be favoring Ethereum, maybe because of its potential for future upgrades.
Well, speaking of tech, let's jump into our first major story, because this one is a potential earthquake for the entire industry.
You have to be talking about the chatter around Microsoft possibly buying OpenAI. Reports are saying that OpenAI's shift to a for-profit model has suddenly made an acquisition a real possibility down the line.
It's fascinating. They've gone from a research lab to a potential IPO candidate, or, as we're hearing now, a prime acquisition target. It really makes you wonder, are we on the verge of a new era of tech consolidation?
That's the billion-dollar question. And what would a move like that mean for competition and regulation? On one hand, it seems like a perfect match, given Microsoft's investments. But on the other, integrating a pioneer like OpenAI would be incredibly complex, both operationally and legally.
Definitely. It's a story we'll be watching closely. Now, from AI to crypto, our second big story comes courtesy of the Winklevoss twins, who are not known for being shy with their predictions.
Not at all. They're forecasting Bitcoin could hit $1 million in the next 10 years. $1 million. That's a bold call.
It is, but you have to consider the source. They're crypto pioneers, and their company, Gemini, is preparing to go public. It generates a ton of debate, though. Is this just speculative hype? Or is it based on real institutional adoption and Bitcoin's growing role as a store of value?
The market is definitely divided on that one. Okay, let's pivot from the speculative to the very real-world challenges facing homeowners. Our third story is about mortgage rates.
Yes, this is a tough one. Economists are warning that even with the Fed expected to cut interest rates, mortgage rates are unlikely to fall significantly anytime soon.
It's so counterintuitive, and it leaves borrowers in a really tough spot. You're left wondering what the right move is. Do you lock in a rate? Do you wait? There's just no clear answer, and it creates so much uncertainty.
And that uncertainty is clearly having an impact. Our fourth story shows that consumer sentiment has now dipped to a 4-month low.
And it seems to be driven by concerns among lower and middle-income Americans about job security and, of course, rising inflation. When people get worried, they tighten their belts.
They do. And that change in spending behavior can send ripples across the entire economy, hitting retail, services, even tech. It's a reminder of how interconnected everything is.
You know, Sarah, when you put all these stories together, it feels a bit like the market is a complex cocktail, a mix of sweet, bitter, and spicy that keeps you on your toes.
That's a great way to put it. Or, I've heard some investors say their portfolio is like a temperamental cat. It does what it wants, when it wants. But you have this exciting potential in tech, with the OpenAI news clashing with the real-world anxiety we see in consumer sentiment and the housing market.
So for investors, what are the experts saying? One analyst I read compared it to the early stages of a roller coaster ride. There's excitement and potential, but also risk. The message seems to be balance your optimism in tech and crypto with caution in the more traditional sectors.
That makes sense. If that Microsoft-OpenAI deal actually happens, it could trigger a huge consolidation wave in tech. But if it gets blocked by regulators, we could see tech valuations pull back.
And on the crypto side, that $1 million Bitcoin prediction is audacious, but it forces you to pay attention. You can't ignore the momentum behind blockchain and institutional adoption, even if you're skeptical of the price target.
It really forces you to ask where your own portfolio stands. Are you positioned to ride that wave of innovation? Or are you more comfortable with the stability of blue-chip stocks?
And in real estate, with those persistently high mortgage rates, it seems adaptability is the name of the game. Maybe it's a time to look at refinancing if you can, or exploring other financial instruments.
I think the overarching theme is that you have to be proactive. An analyst I follow compared it to a game of chess. You can't just think about your next move. You have to anticipate several moves ahead.
Right, and it's important to remember that this is all happening on a global stage. The AI competition, crypto regulation, interest rate policies, these are global conversations, and a move in one country can ripple everywhere else.
So as we start to wrap up, let's leave our listeners with a few key questions. We've seen the mixed market trends, the excitement in tech, and the caution elsewhere. The first question has to be, is your portfolio properly balancing growth with stability?
That's the big one. Also, how resilient are your investments to shifts in consumer behavior or new regulations? And are you positioning yourself to actually capture the opportunities coming from AI and blockchain?
These are the essential questions to be asking. And of course, a huge thank you to Pantheon AI, our information co-pilot, for helping us make sense of these complex market waters. Remember, learning about this stuff shouldn't feel like a full-time job.
Couldn't agree more. It's been a pleasure sharing these insights with you all today. We hope we gave you some valuable info and maybe a few smiles.
Thank you so much for tuning in. Please join us again tomorrow for another deep dive into the markets.
Until then, stay curious, stay informed, and ask yourself, what will be your next move in this grand game of markets? See you tomorrow.
Pantheon AI, your information co-pilot.
Because learning shouldn't feel like a full-time job. Take care and see you next time.